Okay, welcome back traders. Welcome back to the Liquid FX YouTube channel. Here we have a pair that was requested, or a currency pair that was requested on the channel, which is to look at the yen, right? So GBP JPY. And this pair is a very interesting pair, right? So what I'm going to be doing in this video is I'm going to be dissecting a sell trade, because we had people saying, oh, Liquid FX, you only look at buys. Well, the reason for that is because we're in a bullish market, right? And this market is bullish, as you can tell by the structure I've marked out. Here on the daily time frame, we see the last weekly high over here giving us a break. And since then, the black dots over here represent self-explanatory structure, right? So we just see price giving us new highs and lower highs and new highs and lower highs and new highs, right? So we're just going to zoom into price, the most recent bit of price action over here. What we see is we see a very, very, very clean structural breaks to the upside. We see a low, high, and a low. Now we're at a point where we're just above the last high. So if we zoom into price over here in a little bit more detail, what we see over here is we see a breaker structure. So the last high over here, if I label that over here, this is our last high over here. And this last high has been broken, right? Represented by this arrow. So we see a breaker structure over here to the upside. And now we're at an interesting point over here, right? So now we're above the old high, right? Here in the, let's just give it a no color box, right? So we are above an old high. So when we're above an old high, right, live analysis on GJ, what do we expect? Now there's two things we can expect, right? We understand that this market overall is bullish, right? So price is well within its reason. Price is well within reason, to just continue higher, because there are weekly levels to target, right? But that's not the aim of this video. The aim of this video, yes, is to give you a very basic outlook of GJ. So in this case, we could just continue higher. But now that we've broken structure to the upside, what can we expect above an old high? Well, above an old high, we can expect a distribution. Now, you don't need Wyckoff theory in your trading. ICT concepts alone is fine. Let me just call it this. So we could expect a distribution above the old high. And what I mean by that is, if I quickly draw out the Fibonacci tool from the swing low up to the swing high, it's important to understand that price is well within its right to head lower, achieving a discount and then heading higher. And why would price want to achieve a discount based off this structural range, this dealing range from this swing low to this swing high, right? Well, we see a very clear inefficiency over here, very clear fair value gap over here, right? Inefficiency in price, okay? With that being said, price could do this. Price could come into this zone, filling the fair value gap over here before heading higher, right? So we could see price head lower and distribute lower from this region, right? So we could indeed see something like this. We could see price seek lower into the discount, tapping this zone here, filling this fair value gap, and then heading higher, right? So another confluence for that is the fact that we have something beginning with L, the famous L word, liquidity, trendline liquidity over here as well, right? So we have inducement. This here is inducement. What is inducement? Inducement is simply liquidity. So it's a fancy way of saying liquidity that's dropped near a POI. So this is our daily POI. Look at this POI carefully, people. I've had people ask me, oh, Liquid FX, how do you choose a high probability POI? So your high probability POIs, right? This is a daily POI on the daily. So a high probability POI is one that's going to break structure. So this arrow here from the start I mentioned represents a clear breaker structure or a shift of market structure. We see price in a discount, right? So we want to buy at low prices below that 50% level in the discount. And we see a fair value gap being produced over here. So this is a fair value gap just over here, which I'm going to label in blue. So these are the three things. These are the three rules that make up a POI. The additional confluences we have is the fact that we have inducement over here, liquidity, right? So with that being said, that's my very basic outlook of GJ. This video wasn't meant to be an outlook, but I can't help but give an outlook because that's what the people want, and that's what I'm here for, right? So the main purpose of this video is to actually dissect a sell trade as to how you could potentially get involved in a sell trade, right? Because we're at an area of distribution, right? Just want to highlight that again. We're at an area of distribution, right? And the reason we're at an area of distribution is because we're above an old high. So with that being said, let's now go down to the 4-hour time frame and dissect how we could actually get involved in the markets, right? So here we have our 4-hour structure just over here, right? So we understand we're above an old high. So the daily old high was here in this region, and we're now above that. So what we've seen over here is we've seen price give us our following structure the way it's been presented in front of you, right? Now, from here it's important to understand that we had our last low over here. That's almost about to be broken, and I anticipate price to actually break over here with the body. So I do expect this structure to be broken over here. So this is not signal or financial advice, but this is just my take on the pair. I expect this low to be broken. Sorry, this low over here to be broken in line with lower prices down to the daily POI. With that being said, if we dissect price even further, we see a change of character over here. So remember, our change of character or our chalk is very simply when price does this, right? So we see price heading up, and we see the first internal low get broken, just like this. So our chalk is going to be here in, not red, but black. So that's our change of character over here. And to mark out the change of character here on GJ, it's pretty simple. We see the change of character right over here. So the change of character was on the 28th of February, so that's right at the end of last month, right? Here's our change of character on the 4-hour. So that being said, I'm going to answer people's questions as to how you can enter on the sell side, right? Because I've been dissecting buy trades, and I've been dissecting how to enter bullish positions because the market has been bullish. But here's a bearish example for each and every one of you, right? So before we go and look at price in a bit more detail, I just wanted to get this out of the way. So we're above an old high, and we've had a 4-hour chalk. Brilliant. Now let's go down to the 15-minute time frame or our entry time frame, okay? So if I just make this a bit clearer, what we see over here in price, let's break this down. The M15 structure was bullish, as you can imagine, right? We see M15 structure over here, right? So if I mark out my M15 structure, it's going to look something like this. We see a high, we see a low. We see a high, we see a low. We see a high over here. Now, this last low over here has been broken just over here, okay? This is our break of structure, BOS, or break of structure. Now, with that being said, we now need to look for a potential sell opportunity that matches the power of three, accumulation, manipulation, and distribution, right? So I've done a little bit of digging on the charts to find an opportunity, and I managed to find one just over here in price. So I want to bring it to your attention that, yes, this is a back-tested trade. So what we have over here is we have a pool of liquidity over here. This pool of liquidity has been swept. So this is sell-side liquidity just over here, right? SSL, or sell-side liquidity. Why is this important? Because price will look to sweep sell-side liquidity, and it has done over here. So this wick over here was the sweep of liquidity, just over here. Yep, so this sweep here in yellow represents the sweep of liquidity. So all of this sell-side liquidity over here was swept the following week on the Monday the 4th of March, okay? So here's how you could have got in on Tuesday the 5th of March, right? So, again, schematic time, right? So we have, to the left of your screen, the Asian range. So the Asian range here in gray, this is the Asian range. The Asian range is a low volume time of day that accumulates liquidity, accumulates orders, and we see the Asian range do something like this. So the Asian range, let me do that again. So the Asian range accumulates orders, just like this. Okay, there you go. So the Asian range in gray. Beautiful. Now, what do we see the London session achieve? The London session and the New York session, right? What we see over here is we see a very clear sweep or shift of structure to the downside, sweeping the Asian low. So what we see price do is something like this, sweeping the Asian low over here before sweeping the Asian high. Okay, so we see two sweeps of liquidity over here. It's very important. We see two sweeps, not one, two sweeps. Price sweeps the Asian low over here, and price then sweeps the Asian high. Very, very subtle wick, but price does that. This is the intricacies of ICT and general SFC trading. Understanding very, very specific sweeps of liquidity is what's going to get you ahead, right? So we see a sweep of the Asian high followed by a sweep of the Asian low. Sorry, Asian low followed by a sweep of the Asian high. So we see this liquidity that's been swept, and as price heads up, followed by a break to the downside. So we see two forms of liquidity being swept, Asian high and Asian low. So I'm just going to map that on the charts as well. So we see Asian range low swept over here, Asian range low swept, and then up here, Asian range high swept, Asian range low swept, Asian range high swept. Beautiful. Now, you need to ask yourself, why does price do this? What's the point of this and what's the point of this? Well, here we see an enticement of early sellers, and this is what you don't want to be, right? Early sellers, right? You want to ask yourself, should you even be getting into any of this? Should you be getting involved in any of this price action over here in red? Should you be selling here at all? The answer is no, and the reason why you shouldn't be selling here is simply because there's no fair value gaps over here. There's no fair value gaps in price. We understand our entry models are designed to sweep the Asian low and the Asian high. This is one of the main entry models I teach at LiquidFX. One of the three entry models we teach, and it's one that's very powerful and can be utilized on a range of different assets, whether it's future stocks, crypto, stock indices, whatever it is. One of the most powerful entry models involves using the Asian low and Asian high to your advantage, right? So, now that we've swept the Asian low first, we've enticed early sellers, right? So these early sellers are swept out of the market. Of course they're swept out. As we've targeted that Asian high, we swept the Asian high. So price sweeps the Asian high. What does this achieve? This achieves two things. First, it sweeps out early sellers, right? That's the first thing. We see it sweep out of the early sellers, but then we also see an enticement of buyers, not even early buyers, just buyers, because we understand that we're looking for sells at this point, right? So now that we've seen a sweep of the Asian high, sellers have been enticed and swept out, buyers have been enticed. Now what happens? What we're going to look for now? We're going to look for a structural break, just like this. A structural break over here, or a shift of market structure. And we see that just over here. We see a shift of market structure just over here, right? So you can call this an MSS, a market structure shift, or BOSS, or whatever you want to call it, right? We see a shift of market structure. So where do we look to enter off, right? Where do we look to enter off? What I would do as a trader is I would actually mark out the fib tool again, from the swing high down to the swing low. And the reason why I'll do this is because I want to identify an area to trade off, right? So those zones I look to trade from are either at the equilibrium or above the equilibrium, right? In this case, as you can see, price only came up to the equilibrium, which is fine. And the reason why that's fine is because we see a fair value gap over here in price. So I'm going to draw your attention to this fair value gap. This here is the fair value gap that's been produced. Here in blue. This blue fair value gap is where we're looking to enter off. And as you can see, price respects the fair value gap coming in, giving us a nice sell trade that you could look to anticipate, right? Where's a safe place to keep your stop loss? I personally would keep it above the Judah swing, right? I'm a little bit more conservative with my stop loss. Having a slightly wider stop loss is absolutely fine. And as you can see, this trade has given us a lot of momentum, right? Giving us a 1 to 2 or 1 to 3 even, I believe. 1 to 2 or 1 to 3, using the basic Judah swing model, right? Manipulation, accumulation. Sorry, accumulation, manipulation, and distribution, right? All using the power of 3. So if you like this video, give it a like and thumbs up. Just want to give everyone a heads up that we are offering free one-to-one sessions here at LiquidFX. If that's something that interests you, feel free to contact us on Twitter or Instagram. I'll be more than happy to get back to each and every one of you. So until then, goodbye, happy trading, and I'll see you at the next one.